I have decided after looking at the election and being in touch with my friends in Washington that I could take a job as an economist, a meteorologist, or a poll taker, because you can be wrong all the time and still get paid. So I think we could start with that. I had a few observations that I'd like to share with the group, and I just wanted to kick in some things that I've been seeing. I have the unenviable position of talking to DC pretty much daily, trying to figure out what's going on. And I'll start with a very important caveat: don't shoot the messenger. I'm just here to report what I think has happened, and my opinions are carefully considered but loosely regarded. So remember that, and that's all there are. So I think I'd like to start with an interesting concept, and that is no one got what they wanted in this election, apparently. I see, I will say that the evidence is preponderance of evidence is that Joe Biden is our next president. The Democrats lost 10 seats in the House, which they thought they were going to gain 10 and lost 10. They thought they were going to sweep the Senate and have a deep blue wave. And I think had we had a deep blue wave, we probably would have had 500 people on the line today, because we would all been talking about how we're going to pull all our hair out when we get to carryover basis and those kinds of things. As it turned out, I think we had a lavender wave. And as a matter of fact, I was looking at the poll results and I saw in South Dakota, more people voted for marijuana legalization than voted for Donald Trump. So I think it's not even a lavender wave, it's a purple haze. And I do want to comment on marijuana legalization. The one thing that did have a landslide was pot. There was a landslide of pot. In fact, it was an amazing type thing about what happened. And it's no longer a budding industry. It's now full blown and getting higher all the time. In fact, I'd say it's smoking. It's also probable that I know I'm seeing the puns and I can't see anybody's face, so only Katie is smiling on that one. I would suggest to you that you will see probably a wave toward legalization, national legalization, and probably the ability for federals to go do that, for the feds to allow banking through marijuana legalization through that. They're probably declassified as a class 1 narcotic. That's what I think is going to happen. I am hearing that kind of noise. I will comment just briefly on what we think is going to happen to the market. Let's go to this lavender wave. The lavender wave leaves us in a situation where I think the Democratic Party has found itself now in a new fight between itself, and it's in an internecine warfare between what I would call the progressives and the moderates. And I do think President Biden will have his work clearly cut out for him. It is the consensus of folks I'm talking to that a lot of this does hinge on what happens in Georgia. Georgia has obviously, as you all are aware now, I guess I can make one prediction with 100% accuracy. I predict that a lot of money will be spent on advertising in Georgia. So that I'm going with that one. I think I'm there. I mean, for at least a week now, I've been refreshed to see plaintiffs' attorneys advertising on TV instead of political ads, but I'm now getting tired of those as well. So we'll probably see an enormous amount of money pouring into Georgia. The odds makers, which usually are more accurate than the poll takers, thank goodness, the odds makers are associating that Purdue will get one of the seats and the Democrats will get one of the other seats, which would leave a 51-49 GOP majority, which would mean we have gridlock, which typically is good for economics and good for markets and good for a lot of things because it requires consensus. So let's take two scenarios, because we'll start with the presumption that Biden is the president. We'll start with the presumption that the House has remained narrowly.
Nancy.
And let's start with the
presumption
of one of two options. Option one is the Democrats do take both seats in Georgia. And option two, which is about a 25% chance. Option two is the Republicans take one, the Democrats take one, which would be, according to the odds that I see, 75% probability. And I'm, by the way, giving you the betting odds. These aren't my probabilities. I learned a lesson a long time ago. Don't try to predict the future. It ain't what it used to be. So let's take the scenario one, and that is that the Democrats take both seats of the Senate. Under that scenario, you would have a 50-50 tie. Vice President Harris would vote the tie, which means there would be a majority in the Senate. It would require every single senator to vote for something. It seems extremely unlikely that every single senator would vote for a sweeping tax increase within the first 2 years of this president's presidency. I think there'll be many more things to cover. As we're all aware, the pandemic is running out of control. As we're all aware, there's all kinds of things with immigration and climate trade and a whole bunch of other things, and taxes are farther down the list. if I've learned anything in the last 4 years, is that neither party seems to have any constraints when it comes to spending. Both have been able to spend money beyond recognition. And they spent money with beyond recognition this year, maybe to good extent, maybe to bad extent. I was just polling our fellow MICPA members to find out whether most of us think you should delay on PPP forgiveness applications or file now. By the way, the consensus is running pretty strong on delay, not take it right now. I will put it on, I'll put it on Connect when we get a chance. So let's go with the fact that if there is a Democratic Senate, it seems extremely unlikely you'll get a tax increase anytime soon, and probably unlikely to get it in the first 2 years, which means we'd get to the next election and we'd have to look at what happens in that election. I'm going to adhere to what that thought pattern is. That's what I'm hearing from the folks in DC who spend all their time looking at this, and that would be the prospect there. If we go to the Republicans taking one of the seats, McConnell will build a firewall, and you would probably see some horse trading. And in history, markets have done way better under divided government than under single party governments. I mean, you know, if I go back to the 1880s, there's evidence that Republican led government is better for business and better for the markets. If I go back to the 1980s, it shows that Democrats are better for it. So, you know, one thing I always like to think about is Warren Buffett told us a long time ago, don't bet against the United States. For 238 years, that's been a really bad bet. And so I just would count on the fact that we have a resiliency in our economies and a resiliency in our capital markets. I think for the time being, our tax law will probably stay the same. I think for the time being, it seems extremely unlikely we're going to have any major tax changes. So that being said, what would we probably have? Let's take a couple of ideas there and play with it. President Biden is appointing his cabinet as we speak, or trying to build his cabinet as we speak. I still don't know when President Trump is going to acknowledge that President Biden won. Apparently today in Michigan, another blow was dealt to the Trump recall efforts. But when and if and however that does happen, President Biden will have the pandemic to face first and foremost. We'll probably have to get onto that immediately. President Biden will also have to face what's going on geopolitically. There's a lot of geopolitical issues. And I don't think it's far-fetched that we couldn't see something happen in the Middle East between now and January 20th. So there's probabilities that things could go awry there as well. I think you're going to see immigration, probably see more coming in immigration, which means population increases. You're going to probably see somebody having to address the profound effects of the CARES Act in terms of its cost. I don't know if most of you, I mean, we've all been inundated with the CARES Act. So when we look at the CARES Act and see how many things we've actually had to deal with in that, you know, ranging from PPP forgiveness to, I'm thinking about the payroll tax holiday. If we go to the payroll tax holiday, just do a little quick math in your head of what happened to Social Security, payments and taxes. If people were laid off, they weren't paying into Social Security. So if I had, you know, 11 million people unemployed, I had 11 million people not paying into Social Security. I had a lot of people applying for Social Security early. I had an upswing, believe it or not, in Social Security disability applications. And in the meantime, we had no money going in because of the payroll tax holiday, which I, as a CPA, think was a really bad idea for clients to do. I actually advised all clients not to take the payroll tax holiday. But we're going to have to pay for all this stuff. And that's going to be an interesting issue. When President Biden was candidate Biden, President-elect Biden, when President-elect Biden was candidate Biden, he had indicated that he wanted to raise taxes by $3.5 trillion, but he wanted to spend $6 trillion. I think they might forget half of that equation and try to spend $6 trillion and not raise any taxes. And I think those are all issues that we should be thinking about on a longer term run. So what is positive in terms of this? Some positive things that I've heard is potentially McConnell would say to Pelosi and the president, hey, let's do some things together that we can agree on, like infrastructure. I think an infrastructure bill could be in the works. I think there will be, and what I have heard is there will be some form of stimulus, probably after the inauguration, and probably small. So if we're all waiting for a $1 trillion or $1.5 trillion stimulus, the word on the street in DC is don't hold your breath. You won't look good in blue or purple, I guess. Instead, what you should be thinking about is the fact that probably we'll get a $500 billion stimulus. We will probably get a continuation of PPP. I have heard rumor that the HEROES Act will get plugged in, so we'll get deductibility on the PPP. That 265 rule will go away, but that's, again, hearsay. So I don't want you to all go out and say that Leon said that we're going to get rid of it. We're going to get tax deductibility. I don't know that, but that is in the HEROES Act and that is the proposal to kick that back in. Right now, the president has advocated all the decisions on his administration away from Mnuchin to McConnell. McConnell is not in a hurry, that I understand, to do any sweeping stimulus package, but I think we could see a stimulus package. So, bottom line, it's not the end of the world, irrespective of who you are supporting. We have divided government, which generally has been good for markets and good for taxes. I think most of you, like me, are suffering from tax exhaustion between Tax Cuts and Jobs Act and Secure and CARES. I think I've learned more new tax laws and forgotten more new tax laws than I have done in my 42-year career. I'm always pleased that Jamie and I got to be experts in PPP for a grand total of about 8 months. So we spent all kinds of time learning all kinds of things and coming up with spreadsheets and ideas, and then finding out that will be all over here relatively quickly. Tough time to be a CPA in a lot of ways. Some things we're looking at is we're looking carefully at between now and year end, what to do with NOLs. We're also looking heavily at Roth conversions. We're looking heavily at taking looks at portfolios and revising portfolios. From a portfolio side, alternate energy spiked like crazy after Biden's election, potential prospective election. Hot stocks got smoking, as I said before, those took off and went up high. Strangely enough, domestic oil has been up lately, and noise that I hear is that Middle East could be a keg again, so we could see something come into oil, even though that was considered an anti-Biden sector. The healthcare sector has been troubled. I think anybody wants to go take a look at something, go look at Moderna today and go look at Pfizer today. The two companies that announced they've got a 95% effective vaccine on the coronavirus, the market goes up, the stocks go down. And interestingly enough, Pfizer's CEO sold on Monday when he announced that they'd found a vaccine. He actually sold a whole bunch of his stock that day as an insider as well. So strange and unusual markets, strange and unusual tax rules. I think we all need to pay attention to what's going on with CARES between now and year end. I think going into 21, we're going to see gridlock, which probably has the prospect of getting us some kind of consensus in DC as opposed to just unilateral movements. Will we see a tax bill? Everyone I've talked to says no. I'm skeptical myself. Will we see a stimulus bill? Yes. Will it be small? Probably yes. Unless this pandemic really, really rages out of control and we could see something. I think no one's got the flavor or the appetite right now to really go into the massive stimulus. I do get asked questions a lot on modern portfolio theory. For those of you who are hearing the MPT banner being waved that we could just have as much debt as we want, it's a misnamed thing. There is, not modern monetary theory. There is nothing modern about modern monetary theory. Go back and look at the Ming Dynasty and the Sung Dynasty. They used to print paper money whenever they felt like it. It didn't work out well in the long run. The French did this. They tried to print paper money. The colonial governments did it. If we had a colony back in the 1780s, we would just print our own money. As a matter of fact, if we had our own store, we'd print our own money. And we could have our own MICPA money if we wanted to. And remember what money is, and the value starts to go awry. I'm on the Fed Facebook committee here, and so looking at the Fed, we had a meeting yesterday, and in our Fed meeting yesterday, there's no concern at the Fed right now of the overspending. The Fed's balance sheet's at $7 trillion, and no one at the Fed seems to be too worried about them having all this money, but none of them are talking about MMT. They're not in that fan group. They think they're going to grow their way out of it. And our projections and their projections are about 1.8%, 1.9% growth in GDP. So that's the bottom line. Those are my bottom line ideas. I'm open to questions, comments, complaints. I don't want to really hear too many complaints, but questions or comments, or let's talk or let's chat. What do the rest of you think, and where are we at? I can pick on people because I'm an old Walsh professor, so I feel completely comfortable picking on everybody. But I'd just love to hear what everybody else is hearing and thinking. What are our clients saying?
And I'll just say real quick, don't forget to unmute yourself because it looks like just about everybody is muted at the moment.
Because they all listen.
Yes.
They all listen. They're good listeners. Lopiccolo, what are you thinking? What are you hearing?
A couple of things that I'm hearing is one is banks are now starting to push our clients to get through the forgiveness because they want to clear their backlog as fast as possible. And like you, I'm agreeing with, I I'm agreeing that it's a we need to kind of hold off on doing anything because we don't know all the final rules. I saw a thing. Somebody forwarded me a thing that the IRS is going to be coming shy of Congress coming out with anything. The IRS has got rules already to be published, basically denying the delay of the forgiveness or delaying the not allowing for the timing to affect the non-deductibility of the expense, basically. So I've seen that email, or I saw that from some sort of a tax institute that seems to be pretty close to what the IRS has been saying. So I don't think we're going to be able to play the game of timing of when the forgiveness occurs and the deductions happen. So I think the IRS is going to come. I think what IRS is doing is waiting for Congress to act before they decide to publish that, or publish it to force Congress to decide to act on that. But one of the big things that I think that we have to keep remembering is that even though most of the covered period is over for most clients now after that 24 weeks, the law still says that they've got till December 31st to get the full-time equivalent. And I recently had a client that called me up and it's like, the bank's pushing, should I do this? And so we started walking through the analysis. He's like, yeah, I did lay off people. I'm like, then you're not going to do this, because now the further step of the analysis is, can we get you restored by December 31st to get that full forgiveness? So as much as clients are pushing and the banks are pushing, and then the clients feel they need to do this, I think we just have to hold fast and say, you've got 10 months. There's no hurry to do this. Let's just do it the right way. You can start doing some of the FTE stuff, what we've been doing is starting to look at that analysis for full-time equivalents, but that's about it. We're not preparing a lot of applications at this stage.
Cool. George Gregory said projections on the estate tax. George, what I was hearing originally was there was a movement to lower the estate tax actually all the way down to an exclusion of 3.5 million. That appears to be a DOA, and I don't think that's going to be a problem. Somebody did ask me what modern monetary theory is. Modern monetary theory, MMT. I got into MPT because I got my CFA hat on stuck the wrong way. Modern monetary theory is basically that you can print as much money as you have, and it's the duty of the central bank to use money as a fiscal policy, to use money as fiscal stimulus. So you raise taxes when times are good, and you lower taxes and spend money when times are bad, and you eliminate the money and get rid of it. Matt, good to talk to you. Matt saying, how are people handling taxability of PPP proceeds and tax projections for 2020? Jamie, how are you doing it? What are you doing?
I'm taking the conservative approach, and we're putting in as if the loan was either forgiven or the non-deductible in 2020. Just to create, and without absence of further guidance, I think that's how the IRS is going to push it. Worst case is you've got a tax position that may be better off by the time you file the return, but that also means that based on what I read, either the IRS is going to say that it's going to be non-deductible in 2020, or you're going to have a non-deductible number in 2021. So I've got to imagine either way it's going to be non-deductible, and so I'd rather pick it up in 2020 as a precautionary, position versus trying to not do it and then get burned later. So you almost have to kind of walk both lines a little bit, right, Leon? You kind of want to say, this is this and this is not, but I'm going to lean you towards this because I'd rather be protected, or finding a way to protect us between the two. So
I think you're right. I think take the conservative approach, and if they do allow deductibility, you win. You look good.
Yeah.
You're better off. Beth asked a question, if you have a PPP loan greater than 150 as a nonprofit, is there a benefit waiting on forgiveness? No staff reductions or lowering wages. Beth, I would say, in your case, there's no clarification. You don't need the deductibility issue. It doesn't matter to you. So probably a nonprofits could go apply anytime.
Yeah.
And,
I would concur with that too, Lee. And I think that there's probably no hurry in that one way or the other. So do it at your leisure, but you don't have to certainly wait.
Yeah. Judy asked the question, any option on the SBA form 3509 out there for determining loan necessity for loans over 2 million?
Good luck.
Yeah. I was polling all our major members, and actually minor members, major members, everyone else, on where we're going on this thing. We're still trying to get some clarification on that as well. Yeah.
I think that it's all about just documenting why you went with it in the first place. What was the uncertainty of because really wasn't that the high watermark is that you had economic uncertainty or projected economic uncertainty. You didn't necessarily have to have it at the time you pulled the loan, but you knew that you were going to be uncertain. So I think that that's probably going to be establishing what that uncertainty looks like, whether it was, providing financial forecast for worst case scenario or along those lines in your assumptions.
And well, and it's actually pretty easy right now to say, again, there's a lot of uncertainty.
Yeah. I mean, just the fact that the state has issued these new orders, and we all knew that they were coming. And I mean, the uncertainty of what this state is going to do, I think is enough. Hell, you could probably just put, we live in Michigan. And probably be enough.
Do you have economic uncertainty? We live in Michigan.
We live in Michigan. Yes, we do.
We live in Michigan. Somebody did pick up my bait. I threw the bait out on modern monetary theory that I was actually talking about fiat money, and they said, what's going to happen if the dollar gets replaced as fiat currency and we get Bitcoin? Lovely, great conversation. I have scotch here in my office. So Randall, come over and we'll have a nice glass of really good scotch and talk about this for hours, because it's a great thing. I do have people who look at Bitcoin and other things. I do think the United States dollar right now is going to stay the sovereign currency. And there's a rule that I followed, and I'm going to sound like a real cynic, but whoever's got the biggest army has the strongest currency. So, that's been throughout history. When the Romans had the biggest army, they had the strongest currency. When the Chinese had the biggest army, they had the strongest currency. And that's kind of the way it works. So when the Brits had theirs, it was the pound sterling. When the sun never set on the British Empire, it's out there. So just a couple interesting things on that. I of course don't like giant deficits, and I don't like where those things are going. By the way, in Michigan, just so everybody knows, there's some movements afoot, and I'm kind of alarmed by them, but we'll see what happens, to put a sales tax on services and 6% sales tax, and they're moving toward that. There's some traction on it. I don't see how they're going to get that through without in a simple election. They're going to have to do it constitutionally, but I don't know. It bothers me as a CPA. I don't like sales taxes on services. I guess somehow we have to pay for the deficit, and I either going to have to pay for it with an income tax or proper ad valorem tax or something. So we are going to end up with more tax. The states are a little bit more forward thinking, the feds, because they don't own printing presses. So if the states had a printing press, I'm sure they would be using it like crazy. If you want to have an interesting exercise, go look at how fiscally responsible Michigan was. And interestingly, good news we got out of the Fed Beige Book meeting is Michigan is way ahead of other states right now. We actually came out of the recovery better than a lot of other states, despite what we might all think or whatever else. We actually had positive GDP recovery. We had positive employment recovery to the most part. I mean, not completely, but we had a stronger recovery here than a lot of other states did. And it was kind of refreshing to hear that news for the state of Michigan. We will, I think, see a pretty sweeping change in state taxes. And I don't think that the firewalls we talked about in the federal side is going to take place. So just something we ought to be all thinking about.
Leon, where are you hearing the sales tax on services from? Obviously, we'll be all over that. Is that afoot from the legislature or just different groups?
Yeah, it was coming out of the legislature, Bob. So that's where I'm hearing it. And there's actually, strangely enough, support on both sides for that. So it's kind of weird.
Yeah.
Oh, so you're not as cynical as I am, because I think that this is just an attempt to get political contributions from lawyers and CPAs. But maybe I'm wrong.
Well, I'm sure, George, it's always an attempt to get money. One of the rules that's on my wall says it's always about the money. So there's a question that came out that it was a direct message to the Michigan Association. Why wait to get forgiveness? The reasons that I see is we could get clarification. The reason I'm hearing this, I'll ask Jamie to weigh in. The waiting for forgiveness gives you clarification, both statutorily or from the SBA. There's no disadvantage, because right now, Jamie, correct me if I'm wrong, you got 10 months to apply for forgiveness, 2 months for the bank to process it, and 3 months for the SBA to go through it. So you you've technically got, if you hit your forgiveness number October 24th or wherever it was, you've got all that time period to go ahead and do it. And then some people are taking a look at what if deductibility does come into play and that does kick in, you get the HEROES Act coming in, you get a statutory clarification, it would be worth doing. So right now on my poll, I'm hearing about 4-1 wait versus take it now. That's for profits, by the way, not for not-for-profits.
Yeah.
Jamie, you got any other thing you want to add?
Yeah, I mean, part of it too is I think you've still got this, depending on where you're at with the full-time equivalent and the reduction there, you've got till 12/31 to make that up. So why? Because if you remember, the instructions say that where was your FTE and the safe harbor at the date of as December 31st or the date of application, whatever's earlier. So if you've got an FTE issue, you have the potential to cure that before the end of the year. And I'll be, part of this is just plain old. We've already got too much work to do as it is with planning and year-end planning and stuff. It's one more thing that I just can't put on my plate. And I think a lot of CPA firms are the same way. It's just, I get that we get to defer it, and maybe we defer it till May for some of our clients on the over 150, because they'll still have time to do that and make it an after tax season thing as well. Like I said, the IRS is going to, if Congress doesn't come down with a change, I think the IRS is going to tell us that it's going to be non-deductible regardless of the year that we get the forgiveness. So I think that's taken away a little bit, and that was my biggest reason why, is because I wanted to push the deductibility of it out of 2020 and say that we didn't apply for forgiveness till 2021, if that allowed us to hedge the bet. I think the IRS is going to take that away, though.
Yeah, I think you're right. Bob, you asked me a question, and it came out from, I was in the Michigan Chamber of Commerce Tax Policy Advisory Committee meeting, listening to Derek Robinson, who's from the Michigan House Republican Policy Office. And he was doing a research and a potential proposal on the creation of an excise tax on services. Michelle Gallagher was in the meeting with me and some other folks, and so was Lynn Gandhi. Lynn, if you guys don't know Lynn Gandhi, Lynn is one of the smartest tax attorneys on state and local tax, I think maybe in the state of Michigan by far. Lynn was trying to pressure them. Why are you calling it an excise tax when it's a sales tax? And you're not going to get around this. It's not, you're not going to get through the legal challenges to get there. So that was just an aside for you, Bob, and what I've been hearing.
I'm messaging Rachel and John Lindley right now, so we want to make sure we're all over that.
Yeah, we want to stay in on that.
Yeah, and I saw Thomas Lilly. Thanks. He said he's sending his MICPA PAC check today. So I'm going to take this moment to put in a to everyone else too. We talked about money. It takes money in order to have influence, and especially since there's 29 new state legislators that are all going to take office on January 1st. That's 29 new representatives in the state house that we need to educate on the accounting profession, how important it is to have those relationships. So there's my plug. I'll go back on mute.
Well, and
you could also do it monthly, Bob, to remind them they can do it monthly too. Makes it easier.
Right. And I'm a contributor too. I think Jamie is too. So.
Yeah. Oh yeah. Yep.
We also now, monthly, and we also now accept Venmo. So
there you go.
How about Bitcoin?
Not Bitcoin, not yet.
So there was another question in chat. Have you heard any stats about companies with PPP loans and projected bankruptcies? How it'll affect banks' stats? Is it covered under SBA 7A loan?
I haven't heard stats per se. Jamie, have you?
No, I haven't. I haven't heard any of that stuff. So, no. I mean, other than the fact that there's no personal guarantee, so I don't know what's going to happen here.
Right. The bank is actually just a transfer agent, so I don't think it affects the banks at all. The banks won't get hit. So if it goes bankrupt, it's on the SBA. It's a covered loan, so it's not following through as the bank being the lender. The bank is just the processor. That's how I've always read all the rules on all sides. Same, yeah. Jamie?
Yep. I have
so Julie, it won't hurt the banks, but it will obviously hurt the SBA, which, following that thing that Randall and I were talking about, will be modern monetary theory.
Yeah, I agree.
Anybody got anything else?
Leon, what are you, I had a client reach out to me today saying that their SBA, they had an SBA loan out there to begin with, and the SBA agent reached out and said, go back and get for them to go back to the EIDL loan. So I'm kind of curious and they got it for $150,000 almost immediately. So I'm kind of curious on how many practitioners have still, are still advising their clients to go for that EIDL. And then, are there any other grants that people have looked at? Because I saw today, SBAM, Small Business Association of Michigan, opened up a grant for winterization that applied to restaurants and stuff to buy the domes and things of that nature. So kind of curious on if people are hearing any other ways that money's out there available for some of our clients that are there. If anybody's doing anything or trying to figure anything else out or found other creative ways.
Yeah, I didn't know about the SBAM thing, Jamie. That's
Yeah,
interesting.
it just came out. I got a couple notices and I reached out to a couple of my restaurants and said, this is something you should, and they opened it at like 12 o'clock today and they're going to do the first 1,500. And I think the grant was from $1,000 to $10,000, depending on, how you applied for the grant. So
yeah, the total is $3 million for the whole state of Michigan. So they better jump on that quick.
yeah, it may have been, I mean, it opened at noon today, right, Bob? So it could be gone by now. So,
Right.
but,
Jamie, did
yeah.
you get those friends of ours on Lapeer Road to go get theirs in Oxford?
I did. You know what? I heard that the one, yes, the one did.
Okay.
Yeah.
Okay, good.
Yep. I don't know if they got it, but they applied. So
Does this apply to any industry?
it was most, from what I saw, it would apply to some government entities and then some mostly restaurants and hospitality. Because again, I think it was to create, have you seen those restaurants that have got the domes outside now and things?
Igloos.
I think that was
Yeah.
really what it was to increase capacity to allow them to still continue to serve people outside.
Okay.
I can, at one point in time, I had the actual literature from SBAM on it. I'll see if I can find it again and I'll either put it in the chat link or send it off to Katie and she can forward it to everybody.
What else? Anyone have anything else? Well, I think we've got a lot of work cut out for us between now and the end of the year. I think everybody should be looking at, obviously, Roth conversions, those kinds of things. The NOL's hot on the list. Jamie and I have been talking about NOLs a lot, talking about PPP. We've been talking about QIP type stuff. There's a whole bunch of ways we can serve our clients. There's a whole bunch of ways we can do things for our clients. I think probably the one thing that we could really work on is, just making sure our clients have a good business plan. By the way, Jamie, Julie posted that Flagstar Bank has grants for African-American business. That's a great thing too.
Good.
Cool. Well, at that, I'm going to flip it back to Dan and Jamie, I want to thank you for your usual contributions. And Bob, thanks for having us. And everybody, thanks for being great MICPA members. Make sure you chip into the PAC. I'll make that commercial too, because I think we're going to need it. Dan, you got anything else you want to cover, or Katie?
Well, at this point, it's kind of an open forum. If there's any other issues that people want to talk about, it doesn't necessarily have to be related to tax planning. This is just kind of a friendly get together for all small practitioners to be able to help each other. So if anybody else has any other comments, questions, or it doesn't have to be on the election, whatever's keeping you up at night, feel free to share.
Yeah, my only comment is about the PPP loans and the forgiveness is we're just getting a lot of pressure from our clients to get that done. They're really nervous about getting that. So we don't want to run into it during tax season where they want us to do it during tax season. So we only had one forgiven so far, but we've been filling out the applications. But that's where we're getting the pressure from is the clients. They want that off there. That's what's keeping them up at night, making sure they don't have to pay that back.
That's what we're finding too, but you're dealing with like 7 or 8 different financial institutions and they all seem to have different answers on what needs to be done. And so what I tell the client is just wait till they actually demand that to be filed. We have the application filled out, ready to go. We just haven't submitted it yet until we actually know what the rules are.
That's what we're doing too, is waiting until we know what the rules are and then, getting the applications ready ahead of time.
Yeah. Is anybody using the AICPA's forgiveness they partnered up, CPA.com partnered up with another company to prepare the actual applications and store all the information and things of that. Does anybody use that, or are you just using your own system?
I looked at it, but decided to use my own system.
I'm using something called PPP forms.
Okay.
I had about 10 different spreadsheets set up for this. Like you said, we've been all the months trying to figure it all out. It's all kind of,
Yeah.
hopefully we paid for it now anyways.
Yeah, we did so much work up until June, right? Because it was such a tight thing up until June, and then they changed the rules, and we're all like, "Screw it, I'm done. I'm tapping out. We'll just deal with it." And that's exactly what I did. I just said we were going to deal with it later.
Well, I started all that a couple of times and said, okay, fine. When they finally make up their mind, then I'll finish.
Yep, that's kind of where, and to your guys's point about the clients pushing you, I get that the clients are pushing us and pushing and pushing and pushing, and I just keep telling them that I know this is important, but really it makes sense for us just to wait. It just really makes sense, and this is the reason why. And I go through, we're not sure on the deductibility, and I don't want you to do anything. There's no downside in other than the fact that it's a little bit of a heartburn for you, and I get that. There's no downside in waiting. It's not like we're going to be penalized or any of that stuff, or the forgiveness changes. In fact, it just betters our odds that it's going to be better for you. And after I've talked to them about that, and we've had that conversation, a lot of them have just said, okay, I trust you, we'll wait, but we want to go when we're ready to go. So, I mean, I may be killing myself, and all of a sudden come February, in the middle of tax season, I'm going to be bombarded with, with tax returns and forgiveness. But I'd rather make sure my clients aren't going to get screwed out of this.
I've had 2 clients get emails from Bank of America telling them the application would be available in middle of December.
Yeah.
So that was from Bank of America. And I also had a question about self-employment income. I have a couple clients that applied for PPP loan based on their self-employment income. How is that being calculated during the covered period?
Do they have employees, Pam?
Is it distributions? Pardon?
Do they have employees?
No.
They get to file the new form.
Yeah.
And so there's no
number. Assemble documentation, right? I mean,
remember, it's based on 2019 Schedule C.
Correct.
So you just have to give them the 2019 Schedule C. They don't have to prove that they used the.
We've already done that. I mean,
Yep.
That was part of the application. So we're done. Okay,
Yeah.
Good.
Yeah.
That's perfect.
Yeah, Schedule C's, you get the new form. Anything under 50,000. No, Schedule C's get the easy form unless they're under 50. Then they get to use it. If they're over 50, there's no way a Schedule C with no employees would get over $50,000 anyways.
You couldn't get over. You'd be
Right.
at what, 18? Whatever the number is.
Yeah.
You couldn't be
Yep.
over because you're limited to $100,000.
Yeah.
Right. No, we're under 50.
Yeah.
But I still thought we needed to assemble some documentation. And so, we already.
No, you should be able to just
submitted the 29.
provide. You have no employees, so you don't need the full-time equivalents. That's the big. I think that's the big documentation that the banks and the SBA are looking for is documenting the full-time equivalents. Everything else is you just need to have it ready. So if you've got no employees, you don't have to worry about justifying FTEs.
If you're under $50,000, you don't have to justify the FTEs either.
Yeah, I agree. I agree with that.
You have to still
$50,000
submit payroll reports though.
Right. You have to submit the payroll journals,
Right.
but you don't have to prove the FTEs.
You just have to prove that you had the expenses in the payroll, right?
Right.
So we have a couple more questions in chat. I'm going to go out of order here, but since we're kind of talking about PPP and everything, the first question is, how do we show the PPP loan on financial statements if we wait?
AICPA has actually issued guidance on that, I believe. And I think you could take one of 2 approaches from what I read. One, if you anticipate that forgiveness is going to occur, you could actually put it as forgiveness in this year. If you don't, then you can wait till you still leave it as a liability, and you put it into forgiveness when it actually occurs. I think at that stage it would still be probably a disclosure if you're doing disclosures on the financial statements. But I think you get to kind of pick. Yeah.
There's a lot of gap confusion out there on this, but there's basically, you can use the debt model, or if you expect full forgiveness, you can use a grant model, and there's two different grant models. I actually contacted the AICPA about this because there's still a lot of diversity in practice out there about what people are doing with it. We've issued interim financials, and even if we have it as a grant, we're still recording it as a refundable grant and not recognizing the revenue as of the interim financial statements. So when we get to year end, it's going to be interesting to see what happens. And the other thing is the cash flow statement. Where do you show it in the statement of cash flows? There's diversity in practice, whether it's cash flow from operations or financing. To me, if you're going to show it as a grant, it seems like it belongs up in operations. But if you're going to show it as debt, it belongs in financing. So I think by the time we get to year end, hopefully there'll be more guidance, but I know a lot of people are issuing interim gap financials. And you can either do debt or one of the two grant models.
That's really an interesting situation, Julie, I didn't think of the cash flow side of it.
Yeah, you have to, you have to consider the cash flow. And right now, because you read everybody's posts and blogs and firms that you recognize their names, and some of them dogmatically say yes, it's operations, and some of them say yes, it's financing, and some of them say there's diversity in practice. So there's obviously diversity in practice if we're having that come across. I'm just hoping there's a little bit more guidance out there by the time we come to year end.
Right.
Because nobody's really going to actually have true forgiveness, but I bet people are going to start recognizing it in revenue.
Right. And then the forgiveness doesn't hit the cash flow statement because it's a non-cash transaction.
Correct. It's the cash inflow when the money first comes in, when you get the debt. And I'm sure most people just said, oh, it's financing. It was a PPP loan, right? So it goes in financing. So that'll just be something, just be aware of if you're doing full financial statements at year end, that could be something that's slightly different. And there's still diversity in practice between the two different debt models. One is based on international accounting standards and one's based on the not-for-profit. You can't kind of end up almost with the same answer. Oh, and then the footnote disclosures, making sure you do the footnote disclosure. So.
Any recommendations on the presentation on the tax return for the business return? Any thoughts there?
Well, the loan itself the forgiveness is non-taxable, so that wouldn't be showing up on the tax return. It would be just the presentation of the deductibility of the associated expenses. And I've kind of debated on this one a little bit, Randall, about whether do you just reduce the line items that they apply to. However, I don't like doing that because I don't necessarily especially cash basis businesses, I don't like reducing wages different than the W-2 wages. I almost thought of just treating it as a negative expense on other expenses, as just forgiven, PPP forgiven expenses as a negative, and just showing it that way. That way the IRS sees it and knows that it's there versus as a reduction somewhere else.
Yeah, I thought about showing in other income, showing the amount, and then showing the amount being excluded, the income, and then the expenses being added back all in one line item underneath the previous two line items and other income.
Yeah, I don't know if it's other. That's the thing, is I don't know if the reduction of expenses, I don't think are other income, and you don't need to show the loan income because it's already been excluded as no. It'll be showing on the M1 adjustment anyways, on your book to tax differences.
I think I like Jamie's approach. I think I would take the expenses and disclose them, take them off as a negative expense.
Yeah.
Just disclose them that way. I think you'd be opening up a can of worms if you put it on other income. Leon, and this is interesting. Have you heard anything in because we were talking about I was talking about this with another CPA the other day, is I would be interested to see if the IRS puts on some sort of disclosure requirement of if you received the PPP loan and how much you received, regardless of the deductibility, but asking in the 1120s or the 1065 or 1120S returns and that other information, a line about receiving the PPP and the amount. Because they've got to be every tax return over the next 2 years
is going to have something relative to forgiveness on there, or it's going to trigger the IRS questioning your return.
Right.
I mean, if it was me, this would be a no-brainer for the IRS to be able to get into an audit for our clients by just not disclosing properly something relative to the PPP.
So Jamie, I talked to the authors of the Rev notice on deductibility. I think that would be in their wheelhouse. That'd be something they would likely do, but I have not heard anything directly on that issue. But I wouldn't be surprised at all. It wouldn't surprise me.
Yeah. It makes sense.
It does make sense. And it actually makes sense because it makes their life easier too, because then, they don't really want to go through the audit process. It's too expensive for them.
Right.
And even if they don't, we can always add a general footnote to most of our tax returns.
Yeah.
Right. And I actually think that's wise because you then disclosed.
Yeah.
I think I'll go with Jamie. I always over disclose in the case of something. If you don't know, over disclose it. I don't think it hurts. In this case, it clearly doesn't hurt in this case.
All right, so Julie has a question in chat. I have a client that received the EIDL advance, but no EIDL loan. Client received PPP loan. Forgiveness app asks for EIDL loan number. Client was not provided EIDL number. Is it necessary? I told them to contact SBA for a number. Is this correct?
I think so, because the SBA is only going to reimburse the bank up minus whatever they received on the EIDL loan for the forgiveness. So I think that they're going to have to figure out where that is from the SBA of what that number is, so that they can match the grant.
The bank will probably know though what the number is.
No, not necessarily, because the loan, the EIDL loan doesn't go through the banks. It comes directly from the SBA, so the bank is not directly involved in the EIDL portion of it. So I'm thinking that the bank isn't going to know. I mean, the SBA may know, assuming that upon application, because the process is the bank gets the application, they approve it, they give it to the SBA. Then the SBA comes back and says, "Dear bank, this is what we're going to forgive based on the information." And then the bank comes back and tells the client, "You only got so much forgiven, you owe us the rest." And unless the SBA, theoretically, the SBA should know that they've given that company an EIDL advance, but I don't know if that's going to delay the application or not.
Yeah, I don't know for sure either. I would just think that the bank would want, that information's known by the SBA, so they're not going to that application to get held up at all. So they're going to check that before they send it to the SBA, I would think.
Yeah, and maybe the bank will find it for them.
But maybe they got one anyways. Let's make sure that with the SBA they did it right.
Yeah. Yep.
Well, you can try contacting the SBA to get that number. The client can do that. That's, I think, the only way to do
I think that was a wise, Julie, I think that would be the wise thing to do. I agree with you. I'd say you go to the SBA. And then they say you don't have one, then you can just, then you're off, you've gone to the right spot.
Has anybody received, I had one client forward me a bill that the SBA actually sent them. I've never seen anybody get a loan statement, but this one particular client ended up getting a loan statement from the SBA. Have you guys started seeing clients receiving interim statements or anything from the SBA?
Yes. Yeah.
Have you?
For the EID loan, yes.
Yes.
Yeah.
Okay.
Tell you the payment starts next May or whatever
Yeah, and you can start to pay now if you want, or start making payments on it now. Yeah, I was shocked because I haven't seen anything on any of my just one client, and I know I've got a handful that took the EIDL. So
yeah, we have a couple. I've seen a couple of them.
Just as a follow-up to Jamie's, the weatherization grant, I went to the website and it says, due to tremendous number of applications received, the grant's stopping, they're going to stop taking applications tonight at 11:59. So you might want to get on the phone with your clients right now.
Oh, man.
And good luck.
Yeah.
All right, so we have a general discussion topic for everyone here from Thomas Lilly. What are your clients doing to try and find employees? Many are still collecting unemployment.
I have some in my executive forum that are actually paying bonuses. So they're paying finders, you know, they're paying a bonus to people to come in and get jobs. So they're giving them a sign-up bonus. I'm seeing that, and I'm seeing people permanentizing like Lowe's did, what I call the COVID premium. So giving people extra premiums and things like that. I've also seen some in the service business saying we're going to give you more flexibility in terms of your working hours.
How many?
Anyone else?
Speaking of that, how many of you guys are? What are you guys doing about reaching out to your individual 1040 clients that you know have taken unemployment and are going to get socked with, you know, $26,000 of untaxed revenue,
Right.
or unwithheld revenue, I should say, and you know, not expecting it. I'm thinking that, I mean, I don't want to be doing tax projections for, you know, 400 some clients that maybe took unemployment, but at the same time, I know that there's going to be an ugly conversation come February or March when they start to file their returns and realize that, oh, you mean this unemployment's taxable?
Yeah, we've already sent email blasts out.
Yeah.
It's a good idea. I agree with you. It's definitely going to happen.
Yeah.
It happens anyways.
Yeah.
Now it's really going to happen a lot.
Well, yeah, I mean, how many of us saw increases in balance dues just because they changed you know, the new W-4 kind of screwed them. They filled it out incorrectly, and like, I've never owed before, and now you're trying, you know, look, and they've got like half the withholding they did last year. I'm like, you know, so yeah.
Yeah, a lot of clients paid lower taxes actually, but they got less of a refund because of that.
Yep. Yeah, that was a nightmare for the, as far as I'm concerned, for the Trump administration. They should have just never. People don't look at that, right? You know, Joe, they say, I want this big refund because then I can go out and buy this big thing. Instead, you know, they're not getting, you know, they're pissing it away at the bar every paycheck anyways. So yeah. Yep.
That's a good idea to send something out to clients about it.
Yeah.
Blast or Facebook or something. That's a good point.
Yeah, I think that we're gonna try to get that message out too, that relative to the reminding them that the unemployment is taxable and that you may not have had withholding or not enough withholding.
But just to comment about the employees, I do hear that from a lot of business owners. That's besides the uncertainty and COVID and everything else, employees is hard retaining them and hard to get them.
Well, even just getting them to show up for an appointment to be interviewed, or if they accept, to get them to show up to actually work.
Does anybody else have any other questions or feedback or any discussion that they want to have?
What's everybody doing relative to planning? How are you guys doing anything different relative to planning this year going into this? I mean, I know we've got the PPP. Do you feel that planning is going to be a little bit more chaotic than it was in previous years?
Yeah, tax season just ended. You had time to plan yet.
It ended? When did it end? I didn't know that.
Yeah, I've been doing planning for a couple of weeks already.
Yeah.
Sure.
Have several clients coming in.
Yep.
Well, with expected profits being down and potentially lower taxable income on individual returns, I know we've talked to a lot of clients already about more Roth conversions, just because of the fact that they're going to, you know, upon death, their heirs are going to be forced to take it over a 10-year period of time. And if we can reduce the tax consequence now, we prefer to do that. So.
Good idea.
I'm doing a ton of Roth conversions. We've been working them like crazy because of the RMD suspension. We've been doing them. We've been looking at everybody's IRAs, and we've been revising the portfolios while we're doing it too. So we're heavy duty into the Roth conversion, Roth stuff right now, big time.
We've also had a fair number of clients that have continued the, you know, RMD distribution direct to charities. And so that's been a big boon, especially for the charities in these times.
Yep, the QCDs are a big thing, Tom. I agree. We've been doing a lot of those too. We've been, and remember the QCDs you can do if you're 70 and a half. You don't have to be 72. It's not the same thing.
Correct.
Leon, is there really I had a client ask me this today, and he had an inherited IRA, and he's only getting like $4,000 of an RMD. He's probably in his mid 40s, and it was from inherited from his mother. And he asked me the question today: is can he truly suspend the RMD? And I said yes, he could. But is there really? I mean, other than the tax aspect of it, is there really going to be an overall benefit to doing that on a situation like that, or what's your opinion on that?
I do it. I did it. I already had an inherited IRA from my mom. I suspended it under the guise that I would much rather, have the money compound for another year. So I'm not.
That's kind of what I thought too.
$4,000, I'm getting the money, compounding for another year. So I would say, I definitely would advise if you got it inherited, you don't need the money, leave it.
Yeah. I mean, he's one of those that's in a higher income. And so that to me was a no brainer, but I'm also, part of me is still in the back of my mind, although, we may be that we're not going to see much of a tax effect. I'm also worried about a potential tax increase in the next 1 to 2 years. I mean, at the end of the day, like you said early on, we're going to spend upwards of $9 trillion in battling this pandemic and relief and so forth, and all the various acts and stuff. At what point does the levy give, and that we have to have a tax increase, and that both sides are going to be agreeable to?
Yeah, well, I'll go to this one, Jamie, and a quiz for everybody. What was the maximum tax rate in 1946 after we paid for World War II? And the answer is 94%.
Cool.
So
the only thing that I find sort of interesting is the tips have a wonderful negative yield, which to me is, there's a lot of people worried about inflation, which was something that I think you hit on earlier, but I think that's an indicator of it.
I think, George, that there's a theme out there that they're going to have to inflate their way out of this. We can't get GDP growth above 2 in a normal economy. Probably will be until 2022 that we can get back to status that. So in order to get our GDP growth above that in terms of, and we're never going to get it in real dollars, you can get it in tax dollars by inflating your way out of it. And the Fed has signaled that, George. They've signaled that they're amenable to weakening the dollar, and they're amenable to some inflation. And I don't think it's too far-fetched. We'll see it.
So wouldn't that be a good place for your Roth IRA?
Not on a negative yield.
Depends on what you think inflation will be, I guess.
Yeah, if you thought inflation's going to be, I guess if you thought inflation's going to be big, you'd go short tips. You wouldn't go long tips, you'd go shorter tips, and maybe you'd go short, short treasuries or something, and then float your way up. But I'm in the Roth side. I usually put that as real long money. So I usually put my Roths in emerging markets and things like that. So I go more aggressive in the Roths, more conservative than the other stuff.
Okay.
Yeah. Well, cool. It was great roundtable. Anybody got any last minute thoughts? I would just say planning is, we got a month left, and planning is going to be the highest thing. And I would just say in overview, one thing, and just share with all of you, I'm thankful, given it's Thanksgiving, I'm thankful that I'm a CPA. I'm thankful we've been through this pandemic together. And I'm really thankful that 2020 is just about over. I don't want to see it again. So I'll share that with all of you.
Leon, it's been a good 2020 for business, so I can't complain too much. I mean, yeah, there's been some the pandemic and stuff has sucked, but overall, I think it's been a good year for business and for CPAs in general, just to show our value and show how we mean to our clients. And yeah. I think it's been a good year for the profession. So from a professional perspective, I enjoyed 2020. From a personal side and everything, yeah. There are some things I would have rather not had to worry about.
Agreed.
Jamie, thank you for being the world's expert on PPP loans in the state of Michigan. That's great.
Wow.
I just think you'll be relieved of your duty in 45 days.
It was a group effort, so.
Yeah. All right.
Well, thank you so much. Thanks, Leon, for being here with us today. And we appreciate everyone taking the time out to spend an hour with us. And we hope that you were able to take something away from it. And we are doing these every other month. So watch for another email coming out after the holidays in January. So everybody has a great day, and we'll talk to everybody soon.
Thanks, Katie.
Thanks, everyone.